Welcome to The Explainer. So today we're taking a purely objective, data-driven look at a company that seriously caught the market off guard with a pretty surprising first quarter. We're talking about Herbalife. Now, whether you track the health and wellness sector religiously or you're just a fan of massive corporate turnarounds, Herbalife's Q1 2026 performance, it's basically a masterclass in strategic financial maneuvering and operational agility. We're going to break down this recent earnings report, dig into their balance sheet restructuring, and really see how they're modernizing a legacy brand in a wellness landscape that is shifting under our feet.
Okay, let's dive right into this. Before we get bogged down in the complex financials, we really need to grasp the sheer scale of the engine powering this company. Herbalife operates with a staggering global network of roughly 3.9 million independent distributors. Think about that for a second. This direct selling community model is literally the bedrock of their entire business strategy. And as we'll see today, it's both their ultimate competitive moat and a completely unique operational challenge in today's market. So here is our roadmap for today. We'll start with the Herbalife snapshot, move into the Q1 2026 financial results, unpack their strategic debt refinancing, look at the competitive moat, discuss how they're modernizing the brand, and finish up with their future outlook and risks. Let's get to it.
Section 1. The Herbalife Snapshot. Commanding roughly an 18% global market share, Herbalife's core revenue engine is pretty undeniable. Weight management absolutely dominates the pie here at 55%. Targeted nutrition comes in next at 25%, and then you've got the rapidly growing sports nutrition segment making up 15%. This specific diversification is exactly what allows them to cast a wide net and capture a really broad array of health demographics.
Moving on to Section 2, Q1 2026 Financial Results.
Now, in a fairly tough macroeconomic environment, these numbers genuinely surprise the market. Net sales hit $1.3 billion. That's a 7.8% year-over-year growth that actually beat management's own guidance. It's their highest top-line growth since way back in 2021. They also posted an adjusted EBITDA of $176 million and 57 cents in diluted earnings per share. Look, for a legacy brand navigating global inflation, this kind of top-line acceleration is a massive, massive signal of underlying stability. But under the hood, the regional performance is really a tale of shifting momentum. China faced a 12% decline, which reflects some ongoing market hurdles there. But look at India, a massive 32% growth, largely fueled by a GST rate reduction, and that essentially carried the entire quarter. Just to put that into perspective, they hosted events in Delhi and Bengaluru with over 46,000 attendees. I mean, that is literally a small stadium's worth of distributors. Latin America also showed fantastic strength, pulling in 17% growth. It's this exact geographic diversity that gives them the buffer to weather downturns in specific localized markets.
Section 3. Strategic Debt Refinancing.
Now, what's really interesting here is that strong sales are great, obviously, but how you manage the balance sheet really dictates long-term survival. In April 2026, Herbalife pulled off a massive restructuring. They successfully refinanced $1.45 billion in senior secured debt. This was a huge package. It included a new revolving credit facility, a new term loan, and $800 million in new senior secured notes, all used to pay off existing, much more expensive debt that was looming on the horizon.
Let's clear up the financial jargon for a second. What this restructuring essentially does in plain English is save the company around $45 million in cold, hard cash interest every single year. By pushing their debt maturities out beyond 7 years and locking in lower interest rates, they've dramatically freed up their financial flexibility. They've already slashed their net leverage ratio down to 2.1x, and they've got a very clear, stated target to get that below 2x before the end of the year.
All right, Section 4, the competitive moat.
In a world totally flooded with nutrition supplements, Herbalife leans on 3 core advantages to defend its massive market share. First up is their seed-to-feed vertical integration. This ensures absolute supply resilience and fiercely protects their 78% gross margins. Second, you have their proprietary patent-backed formulations. Having localized R&D allows them to pivot quickly and adapt to high-growth markets. And third, and perhaps the most crucial piece of the puzzle, is their community coaching model.
Now, while multi-level marketing models frequently face regulatory scrutiny, structurally speaking, it drives undeniable results for Herbalife. Having a distributor actively and personally coach a customer naturally creates higher cross-selling opportunities and way better subscription uptake. Ultimately, this distributor-led approach yields significantly higher lifetime value and repeat purchase rates compared to a customer just aimlessly grabbing a tub of protein off a standard retail shelf.
Moving to Section 5, Modernizing the Brand.
Let's see how this all builds, because relying on legacy models just isn't enough anymore, especially in a modern health space that absolutely demands transparency. So, in March 2026, Herbalife kicked off a multi-year global packaging redesign to keep themselves relevant. As you can see, they're shifting to a much cleaner, more modern and vibrant look. They are deliberately bringing the science and the nutrition to the very forefront of the design, really making sure that the benefits inside the tub are clearly communicated on the outside.
But you know, modernization isn't just a fresh coat of paint. It's about genuine product evolution. On April 30th, Herbalife finalized the acquisition of Bionox core personalized nutrition business. This was a $55 million base consideration, and it's a massive, aggressive push into the booming AI-driven health space. Think about it. Competitors are already selling DNA-based supplement kits. So by integrating Bionox tech, Herbalife will now be able to offer hyper-personalized, custom nutrition straight through their distributor network. They're starting this rollout in Europe and then expanding to the US.
Finally, Section 6. Future outlook and risks.
With a surprisingly solid Q1 in the books, and these new products hitting the pipeline, management is clearly feeling confident. They actually went ahead and raised their constant currency guidance midpoints for the full 2026 fiscal year. They're now projecting reported net sales growth of up to 5.5% year over year, with adjusted EBITDA peaking around $705 million. And this confidence? It's especially notable because they're openly acknowledging some pretty stiff headwinds at the same time, like ongoing input cost inflation and reduced tax benefits.
Now, it's absolutely vital to weigh those strengths neutrally against some very real existential industry risks. Yes, for sure, they possess a massive, resilient 3.9 million strong distributor moat and incredible hyperlocal agility. But the threats are real. You've got heightened global regulatory scrutiny that demands massive, ongoing compliance spending. And perhaps even more fundamentally, the explosive cultural rise of pharmaceutical weight loss drugs like the GLP-1s seriously threatens to disrupt the traditional meal replacement market altogether.
Which leaves us with this defining, thought-provoking question for the company's future. Can Herbalife's aggressive pivot toward highly personalized nutrition, combined with the sheer undeniable force of its global distributor network, actually outpace the massive market shift toward pharmaceutical weight loss trends? Look, their Q1 2026 results show a company fighting back hard with financial discipline and strategic growth. But this wellness landscape is shifting fast. Thanks for joining me on this explainer, and definitely keep your eyes on how this whole turnaround story continues to unfold.